Well, Superman, the only thing that could stop him was kryptonite. And as far as the financial service industry is concerned, gold is kryptonite to their work. And by golly, if gold goes up a lot, you could be certain financial assets are going down a lot.
Please join us for our next live stream Sunday, April 2nd at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, April 2nd, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Peter Grandich joins us today. Peter is a specialist in retirement business and estate planning, and he entered Wall Street back in the mid 1980s with neither formal education nor training, and within 3 years was appointed head of investment strategy for a leading New York Stock Exchange member firm. Peter would go on to hold positions as chief market strategist, portfolio manager for four hedge funds, and a mutual fund that bore his name. Peter is also a member of the National Association of Christian Faith Consultants and the author of the book Confessions of a Former Wall Street Whiz Kid. It's time to saddle up and silver up for Peter Grandich. Peter, welcome to SBTV. How are you doing?
Very good. Thank you for having me.
Thank you for coming on. I'm really, really glad to have you. Peter, you wrote the book Confessions of a Former Wall Street Whiz Kid. What moved you to write this book and what is it about?
Well, it's actually in its fifth and final edition. The first edition was more than 10 years ago. Someone who worked for me knows of the trials that I went through in terms of ups and downs, both monetary and spiritually. And they felt because it was a uniqueness from the start. I never even finished high school. I wasn't intended to be on Wall Street. I was actually a warehouse manager, and I lost money through a penny stockbroker, started an investors club, was discovered by a financial advisor, and the rest was history. So it's a different type of story. It's not the major college Harvard type person, but it had some uniqueness in it. Within 3 years, I was head of investment strategy for a New York Stock Exchange firm, and I made a forecast of a crash, which they wanted me to retract or resign. And of course, the 1987 crash came. And the next day, I happened to say within 2 years, we'll be back at a new high. So if they thought you were crazy the day before, they thought you were even more crazy that day. But that's where the Wall Street Whiz Kid, one of the major networks in the United States, gave me that name. And I kind of milked it for the next 39 years. So,
Yeah, no, it's a great call. You earned it. You deserve it. And Peter, one of the first things I noticed when I go to your website, petergrandich.com, is a photo of someone in prayer. How important is your faith both in your personal and professional life?
well, at the start, I was a what I call a C&E Catholic. Christmas and Easter, I got excited, but the rest of the time, I went to church. But you know, after the first loss of large sum of money and the first depression, I got fairly involved with my faith. I started doing Bible study. I started to came very close with a full-time lay evangelist man who ended up being my best friend. But it really took the second time in 2008 having another fall. And at that point in time, I concluded that my greatest thinking got me there. So my own thinking is not going to be very successful. And I really delved into my faith then. Now I've worn it on my sleeve. And here in the States anyway, the financial industry will tell you you can put a bull on the door, you can put a bear on the door, but we don't want to see God's picture on the door. So I had to break away and kind of operate on my own. And I got very involved with Christian sports ministries, with professional athletes and that nature. And as I told you before we started, if I didn't do that, I probably wouldn't be here today because there was a period of time in my life when the Ten Commandments were just 10 suggestions, but now they're all commandments.
Peter, again, in your Christian faith in scripture, there is a well known verse that goes, "For the love of money is the root of all evil." And this can be dissected numerous ways, including, are we seeing perhaps the global financial mess we are in as a result of the love of money?
Well, you're right about First Timothy. That is It says it's not, it's the love of money. God never said money itself is bad. It's the love of it. Interesting thing about scripture, which I consider the manual of life, it is, there isn't one verse in it positive about debt. In fact, there's a lot of verses that are negative about debt. And there's more talk about matters of finance, money, and possessions than there is even about heaven or hell. So the good Lord and who he inspired to write scripture really knew that money was going to be a big, big issue for people. And I would say, I can only speak for here in the United States, but here in the United States, the love of money really led us to the many problems that we have now. People, I have a planning business, and I would tell you 7 out of 10 families that come in, from just working people to some of the big professional athletes I dealt with, they're all living at least 1 or 2 levels above where their finances truly support. And the way they do that mostly is debt and buying things that they really don't need, but they think the world tells them that it's a good thing to have. So I would say the love of money, to answer your question, has led to a lot of the difficulties that a lot of people in the world are facing now.
All right, let me throw it a little bit in reverse here. Is it wrong to love making money?
Well, God doesn't want everybody to be Mother Teresa, but he wants us all to have a heart like Mother Teresa. So that's why there are some teachings in scriptures about how it becomes challenging the more money you make, the harder it can be to live out a life of Christ. That's, the eye and the needle scripture. My feeling, and there's a chapter in my book, I'm not a believer in what's commonly known as Christian prosperity, where God wants everybody to be filthy rich. I don't think that is the case. And I find it very hard when I hear here in America that there's some televangelists that are worth $100 million. I just can't imagine Jesus is going to say good job when they see them. I just have trouble with that. But I don't think we should be to feel that we all have to be poor. I think what we should do is that the more blessings we have, the more expectation there is to share that. That's why Jesus loved so much the woman that only gave the 2 coins versus the Pharisees that were just giving it out of excess money. And that's that. I think that's kind of hard he wants to have. And real quick, the rich man story and why he goes away sad is because he couldn't part with his money. Jesus, I like to put it in the 21st century. It was like asking him to go have a garage sale, sell all your stuff, give the rest to eBay, and come follow me. And the rich man said, "Whoa, not today." And he couldn't part from that. And that's why I think Jesus doesn't want us to be so attached to money that we put everything else second to that.
And Peter, you are a contrarian by nature, and you say that the next great threat to the United States is neither terrorism nor biowarfare, but a social, political, and economic time bomb of unprecedented proportion. What led you to this conclusion, and is this time bomb already ticking?
So you're correct. We started talking about that in late 2020, and throughout 2021, I was urging anybody who wanted to listen, many didn't, to get completely out of our stock market and bond market because of the thing you just said, that I envisioned a social and political and economic era unlike anything the United States had ever gone into. Now, I didn't have any real specifics. I didn't predict we were going to have a banking crisis and COVID and all that stuff. But the ingredients were there. And most of all, the greed and the lack of real professional advice from Wall Street. I've coined much of Wall Street, and that's why I don't get invited to their Christmas parties. I call them the don't worry, be happy crowd. You can literally toss them off the top of our Empire State Building, and all the way down, they all say the same thing. Hey, so far, so good. And it isn't. We've been a country that's been living beyond our means. We have a horrendous debt crisis, which is going to be rivaled by a retirement crisis. And then we have all sorts of political issues. We can't even have both parties go in a room and talk about anything. And there's such a mess in the United States right now. So I felt it had to spill over to the financial markets in a hard way, and it has. And unfortunately, I think it's going to continue.
If you're enjoying this interview with Peter Grandich and I, please consider subscribing to our YouTube channel. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. All right, this ticking time bomb. Uh, you had said that it's something we've never experienced before, but it, how would you liken it to anything perhaps that we have seen in our past?
Well, I don't want to say it's going to be like the Great Depression because there were a lot of different circumstances then. I will tell you this: the United States is not the power or the respect, and deservedly so, that it once had. It has greatly fallen in that respect. It is uh, getting worse, not better. And part of that is that we don't understand from the financial group. I think I do, but the financial group here in the U.S. doesn't understand how geopolitics impacts us. We think we're insulated from it, but we're not. And we learned that through the pandemic. Most Americans did not know before the pandemic that most of the stuff that they want and need was made elsewhere. It took the pandemic to find that out. And of course, that ended globalization, which for 20 years, that's all Wall Street would talk about, how much money you can make through globalization. But that's dead. And everybody's now trying to think for themselves and trying to hoard what they have. And the problem is for America, we realize some of the most critical things that we need, not only do we make them, but they're being made in a country which has really come an adversary now, which is China.
And Peter, the you kind of touched on this where the U.S. has repeatedly raised its debt ceiling throughout the decades, and fears of a U.S. default are often conjured during such times, but they always seem to raise or suspend the debt ceiling anyway. Yet, perhaps nothing bad has really happened. I don't know if that's the right words to say, but is this also a ticking time bomb you expect to explode in the next few years? This debt ceiling?
So why they call it a debt ceiling, I don't know, because I think it's been raised 68 or 70 times now. I mean, it's a foolish act that they go through. Uh, to understand our debt situation, right now the United States has somewhere between 32 and 33 trillion dollars in debt. And I got to tell you something. I started in the business in 84. I never thought in any time in my career we would use a T to describe anything in debt. We now have trillion-dollar deficits, not just our debt. We also now, because of our issues with our Social Security, Medicare, and Medicaid, our CBO, which is kind of like an independent government group, says that that's going to cause another 19 trillion in debt over the next 10 years. Now, let's forget even the 50 trillion for a moment. Let's go back to the 32 trillion we know. Let's just say interest rates go to 5% and they stay there. We don't have much more of a rise than that. And they average that. Well, when you start having to service that debt and refinance it, that's about $1.7 trillion in interest expense, well over a third of our entire income as a country. It's unsustainable. So forget about the principal being paid back. We're going to go down a road somewheres in the next several years, somewheres between 1 and 10 years, and run into a problem of servicing our debt. And that doesn't count all the other issues, which I think is going to rival that, is a retirement crisis. So yeah, it's a bad problem. We're seeing some of the results of it. It's been under the rug, but now the rug has been pulled, and people don't like what they see.
So with what you're saying, Peter, perhaps things, especially with the boomer generation, things like pensions, 401ks, perhaps even Social Security, they look to be headed into some troubled waters.
We now have, according to independent studies, up to 75% of Americans working paycheck to paycheck. And so when we had this inflation scare this last year and a half or so, many of those people had to resort to credit cards because their wages couldn't cover what now things were costing, let alone how are they going to retire? What are they going to retire on? You can't live on Social Security, even if it stays sustainable, which there are going to have to be a lot of changes there too. So we're going to see, especially boomers, and right now, people that are retired, the average retirement account last year in America, according to Fidelity, lost 25%. That's how much the average account fell. Add 10 to 20% inflation over 2 years, That's a lot less that a retired person now has. And now polls show that seniors are more fearful of running out of their money than passing away. And that's a very hard thing to accept. And if I may, the big issue that's going to come that almost no one's talking about now, but I'm afraid it is going to come. When this gets tougher and the taxes go up and really the younger folks who will be working will be more burdensome, they're going to say, wait a second. We're paying for an 85-year-old man to have a couple $100,000 special operation for lungs and all through our Medicare. No, he's lived along. I'm being taxed to death. I can't afford anything. The man who's 85 is going to say, well, listen, you took it out of my pay all these years. Now I want to take advantage of this. We're going to have an age battle in the United States, and I don't think it's going to be limited to the United States. Canada has already introduced and now has laws practicing where there's medical, which is all socialist medicine, is actually encouraging people who are very sick and old or very old that the choice of versus fighting it is to, take your own life. And it's a culture of death. And for me, that's very hard because it hurts me from my spiritual more than anything financial. And I just can't imagine what it must be for somebody that old to think that their only way out of this is to commit suicide. It's unfathomable that a country could encourage that in any way, shape, or form, and they're not alone. So we have 10 states now here in the United States that allow assisted suicide. So from a spiritual side, it's a very, very tough thing, and it's part of the changes in the United States where now half of Americans don't have a religious belief. They're either agnostic or they're atheists.
Peter, I don't know if you're familiar with the fourth turning, the term the fourth turning, and that book, The Fourth Turning. But do you think part of this rift between young and old is going to contribute to this fourth turning?
Well, I can just tell you this: there's going to be, and I say battle. I hope not that we're going to be combat in the streets, but there'll be political and social battles between the young and the old, the left and the right. There's no middle ground in the United States anymore. For if you don't live here, you don't realize how everybody is on an opposite side. There's no bipartisanship anymore. You're either leaning to the left or you're leaning to the right, or you're hard right or you're hard left. And that is going to be a challenge because when the age battle does come, usually politicians side with who has the money. And normally the older people have the money. So we'll have to see. It, it's one of those things that I feel that I know I'm right, but I hope I'm wrong.
Is there any way? I mean, after all hearing all of this, is there any way that the let's just say the boomer generation or anyone that has a pension 401k, is there any way or anything that they could do to protect what they have there?
Well, I've been saying for years, and not many have listened, that life has to become less is more. Uh, our parents, and you were from originally. You told me where you're from, so you're from Hawaii, and our parents and grandparents didn't have credit cards. They didn't have 5,000 square foot homes. They didn't have two luxury cars parked in the street and all. But every medical study says we're more of a mess now mentally than we ever were as human beings before. So all this stuff didn't make us any happier and all. In fact, people will tell you that if you be around people that are just make getting by and all, they as a group actually have more happiness than some of the richest people in the world. And so I just have to say that I think less is more, and too much stuff here in America. I don't know where you are in Singapore, but we have every few miles there's a public storage facility on a highway. People are storing stuff there that they're not storing back at their house. Our parents and grandparents, everything they owned was in the house. They didn't have to go to a warehouse to store it. So again, it's what the world has taught them that somehow more stuff equals more happiness, which is a big lie.
Another ticking time bomb seems to be whatever whatever comes out of the Fed and the short-term impact that it has. Between these two choices of continuing to raise rates, which just happened, or bringing in some type of QE again, what will the Fed ultimately do?
Well, the world's greatest credit expansion is dead, and so is it in the United States. Uh, what is transpiring as we speak, and as whenever you add this in weeks and months after it, we're going to see. We haven't seen the end of the banking crisis. We have triggered something. You know what really drives me crazy? Somebody in the Federal Reserve, when they were all talking about raising rates and we have to fight inflation, didn't say, wait a second, all our banks, we make them invest in treasuries and all. That's going to drop down in price. They're going to have losses and they're going to have to go out and raise money. Where were they thinking on that? They're all trying to say it's a, yeah, now we want to pass a thing here where we're going to cover all our bank money. Well, let me tell you something. If I'm in a bank and we're talking about investing, I'm going to turn to my partner and say, listen, let's invest in this. The worst case is if we lose, the United States is going to give them back their money at deposits. So I think we've opened a terrible Pandora's box because of this crisis. And we also don't seem to have any real adhesiveness between the Fed, the Treasury, and the Biden administration. When when we raised the rates on Wednesday, the same time the Secretary Yellen was saying the opposite of what Powell was saying. That's why the market suddenly created 500 points. Now I said in my tweet post that night she'll walk that back the next day, and she did, but the damage was done already. And I have to tell you, I've watched Fed chairmans and I've watched this guy, Jay Powell. He was not himself in this most recent situation. This is a very troublesome situation. I mean, it can get a lot worse. And the next several days and weeks will go a long way to how bad or how bad they can prevent it being.
Yeah, the Fed surely looks like they are in lockstep with whatever the administration wants to do. Another ticking time bomb, the U.S. dollar. We've been told for decades that there is no challenger to the U.S. dollar. Although getting louder and louder is the sentiment that the US dollar is dying. Peter, are we seeing the US dollar dying today? And if so, what will replace the US dollar?
Well, one couple of things we know. We know that the actual holdings of dollars have declined, not fast, but they've declined as several percentages by other countries and all. I think one of the main reasons gold has done so well and so much buying by central banks is because they want to diversify away from the dollar for several reasons. Some because of how we handled our allies the last few years, especially out of Afghanistan. We effectively left our allies all by themselves, fend for themselves. And the Biden administration has not made friends or done anything good in the Middle East to the point where the Saudis now are talking about ending the petrodollar and entering the BRIC nations and being willing to sell oil for rubles. And so somewhere, whether it's the BRIC nations, some regional areas where they're trading, they're going to not use the dollar. And that'll be the true beginning of the end of the dollar as the reserve currency. It's clearly peaked. It's the other benefit for gold and silver right now. There's no question in my mind that we are not going to see any more interest rate hikes. They have to save the banking system over inflation. They just have to. They have no other choice in that. So with that, the dollar will have peaked. The only thing that the dollar had going for it is, to many people, was seemed to be the least of choice of the worst of possibilities. The euro is just the European group is just, it really should be dismantled in my opinion, but I don't think it will be. But and of course, closer to where you are, China is becoming a really measurable economic and military force and is starting to diplomatically go out, whether it's real or not, and being the person that helps solve problems when that used to be the United States job. So it's quite interesting. And I think here in the United States, our financial community has been not looking at geopolitics. They've been caught up in the Kool-Aid of the free money and trillions of dollars being crept, and now they have to have a quick education on how it's playing a role in their financial markets.
Right. I agree. I think in my lifetime I've never seen the diplomacy that China is offering the world right now. I've never seen it to this extent before. And I believe you are also of the belief that we may see some type of a gold backed or commodity backed currency. Do you think this is something that's going to come into play as the dollar starts to falter?
Well, I don't see any reason why if the BRIC nations decide, because there's more and more joining. They were about 22% of the world's GDP. I suspect with the nations that are talking about joining now, they'll at least go to a third. Why can't they set up some sort of formal currency to trade among themselves? I mean, and the most logical thing, of course, is to use gold. We know it for a couple thousand years. We know when we had a gold-backed currency, we didn't have the deficits and debt that we had. Uh, but I really think that bare minimum, we're going to see regions trade without the use of the dollar.
And again, with all that's going on, how important is it for people to understand the concept of wealth protection?
Boy, it's pretty tough now here in America because, like I said, 75% of Americans are working paycheck to paycheck. You talk to any of our food banks anywhere in the country, they'll tell you how much more of people are showing up and up the ladder of working. That's how tough it's come. But for those who have been blessed and have excess and other than what they have to pay their bills, they've learned the hard lesson that the stock market is not a one-way street. Uh, my biggest reason that I said in 2021 to get out was what I believed was a professional investment community that didn't have the experience that learned how to sense drive on a one-way street. And when they see two-way traffic for their first time, or worse yet, a roundabout or what we call traffic circles, they're going to go into a panic. And that's exactly what happened. Now, of course, that don't worry, be happy crowd is telling those people that had a big loss last year, hey, it always comes back. And for 30 or 40 years, they were right. But for the previous 100 years, that wasn't the case. So if it doesn't come back, especially this year, if we have another down year, and not by much, those people are going to face hard choices. They're going to be down a third of what they were worth, plus inflation ate away. I don't know if all of them are going to accept, yeah, I'll hold on. I think they might decide that they have to cut their losses and do something else, which will only make the market go down more. So I'm not in the crash camp. There's people, one famous guy who's come out this week calling for another 50% decline. And somebody asked me, what do you think of that? And I said, if it happens, everything we have is going in the toilet. I mean, the life as we know it would change dramatically. And it will affect the entire world if the United States stock market fell 50%. So, uh, do I still think there's another 10 or 20% down it? Yeah, I do. My own feeling is if it ever got back to our pandemic lows, I think I would want to go long again. But until then, I don't want anything to do with general equities.
Okay. Speaking of equities, Wall Street, I've heard you say that though. Wall Street, they purposely see gold or perhaps silver as kryptonite. Could you explain a little bit on this?
Well, Superman, the only thing that could stop him was kryptonite. And as far as the financial service industry is concerned, gold is kryptonite to their work. They sell financial assets, stocks and bonds and other paper assets. And by golly, if gold goes up a lot, you could be certain financial assets are going down a lot. So over the years, when I was a money manager, even in the planning group that I still work with, I say to people, own gold and hope it doesn't go up. And it's funny, almost everybody says the same thing when I said that. You want me to buy something that's not going to go up? Yes. You have car insurance, you have home insurance, you have that in case something happens. That's why you need to have gold minimally. Now, I own it for capital appreciation. I'm looking to actually make money on it, but for the bare minimum. And here in the United States, they say half of 1% of portfolios are in gold. I don't even think it's 1/10 of 1%. And that's why I think that when the inevitable switch comes, and I've always said getting over 2000 is what it's going to cause, all we need is 1 or 2% of the money that's in financial assets to move to gold and silver, and they will skyrocket. And I think they now have the reasons to. The banking crisis, literally the fear that people realize that you mean the money that's sitting in my bank could be worthless? No one's had that thought until these last few days. And that's why I think you're seeing a lot of people reporting that sell gold and silver. First time people are showing up to buy the metal. And I think that bodes well for the price.
Okay. We hear all the time, guys suggest 5 or 10% of your portfolio should be in gold. Is that about right to you, or what would you say would be the more of a proper number?
Well, it's all about what you think could possibly lose on the other side. I would say it would have been more a couple years ago because the market was a lot higher. But I think I don't have a problem when somebody says 20 or 25%. I don't, because I still think there's enough that if we're wrong and the stock market goes back up, yeah, gold and silver might go down some, but I don't mind owning, the average person having something like that. I will tell you this. I think people make a mistake and think they buy mining shares to own gold. That's not the way to own gold. You want to own the physical gold. You buy mining shares for capital appreciation. You buy gold, as I just told you, and silver. The interesting about silver, I've never been more favorable for silver versus gold. And the silver bugs get mad at me. They say, well, you like the metals, but why do you always say silver is the kissing cousin? Well, for a lot of reasons there was, but the fundamentals have changed dramatically for silver now. The dramatic increase in industrial use, the less of amount being found, and it's still relatively cheap. And so uh, I would say gold and silver need to be equally distributed through an account now, where I used to favor gold over silver. And one of the reasons, by the way, is the public always likes quantity over quality. So they rather own more of something, even if they use the same amount of dollars. So when silver's 22 and gold is 2000, they think the better bet is the $22 number. But right now, I think they both have an equal opportunity of going up, pretty much the same percentage.
Peter, I've told my colleagues here in Singapore that the U.S., back in the day, you'd hear, you'd hear something you either loved or hated. This chant of "We're number one, we're number one" back in the day, referring to the USA, of course. Let me ask you though, is it possible in the mindset of the people of a nation to be okay with being number two or number three, or maybe not even top five or top 10? Do you think the people back in the States could handle not being number one anymore?
I think the younger people could. I think some of the older people still have that patriotic World War II, Korean War, Vietnam War kind of thinking. But I'll tell you this, I wish we weren't number one. Let China be number one. Let them have to run around the world and fix everything and spend all the money and so forth. One of the things people didn't like about Trump, because you either love Trump or you hate Trump. There's no middle ground on that. But when he said make America great again, he also said America has to come first. And I think most nations say that. You have to think of your own nation first, but you can't disregard other people. And so I don't have a problem. And listen, ask Great Britain. They were once number one. Go way back, ask the Italians when the Romans were in charge. Eventually, number one doesn't stay number one. And I think we're seeing that transaction take place over the coming, next several years. China will become more and more of an economic and political uh, stronghold. And they have a different way of looking at life that a lot of Americans do. And that'll be the interesting challenge, because China is not dumb. They may be in a different mindset, but they don't want to see the United States destroyed because they lose a lot of consumers that they can sell their stuff to. So I don't think they want to blow up the United States, but I do think they they think a lot differently how they look at life than the typical American does.
All right, Peter Grandich, before we wrap up, can you tell us about your website, petergrandich.com, and the services that people can find there?
Well, just unfortunately, we can only work with American residents in our planning group. But I do have a website, but I'm really much suited to Twitter, which is at Peter Grandich, and I spend a lot of time there because it's the easiest and quickest way to share your thoughts and ideas. I have to tell you, when I think about it, I used to write a newsletter, take a day to type it up, go to the printer, wait for it to dry, fold it, put it in the mail, and be out 2, 3 days later. Now in 3 seconds, you can tell the world what you're thinking. It's It's an amazing transaction in the last from when I started almost 40 years ago.
All right. Peter Grandich, it's been a pleasure having this time to speak with you. I do hope we can do it again soon, and let's let's hope things turn out for the best.
It was most enjoyable. I'll be glad to come back. God bless.
That was Peter Grandich sharing his views on the economy and precious metals. To see more of Peter's insights and opinions, please visit petergrandich.com or follow him on Twitter at Peter Grandich. If you like this video, please do consider subscribing to our YouTube channel. Audio-only versions of this interview can be found on iTunes and Spotify.